Hi, this is Jeffrey Kurt, Kurt Financial Group, and today is Friday, February 28, 2025. So yesterday was a painful day in the stock market. Going back to Wednesday, Nvidia released their quarterly report, year-end report, and I don't know if there's anything that significant or that negative within the report, but I had a conversation with somebody yesterday who asked about, why is Nvidia down? And my response was basically, it's a great company, but it's an overvalued stock. And at some point, that amazing growth rates are going to moderate, and maybe the margins come in a little bit. Maybe the guidance was a little soft. I'm not sure of the details of the report. I mean, the initial reaction for Nvidia was kind of a sideways trade on Wednesday night, and even into the opening of Thursday's trading. But then, stocks weakened a little bit. There were some significant levels that were broken to the downside, and the acceleration of the drop and plunge, picked up with, I believe, some algorithms and momentum traders and like that. And so I've been speaking about the risks that are inherent in this market. Overvaluation and concentration and like that. And we were susceptible to these type of days. Will it continue? I don't know. There might be some stabilization here, but I think it points to the risks. I think you need to adjust. I think the risks remain there, even though hopefully we stabilize and kind of trade a little bit higher from here and recover some of this, but that doesn't mean it has to. And the risks are there in terms of valuation, in terms of changing landscape with tariffs and with all the changes going on in the economy. There's, I think, an adjustment, potential there in the stock market. As of last night's close, the Dow was up 1.6% year to date for the 2 months. S&P lost it all. I mean, we're down 1/3%, but gave up all the gains. The Nasdaq's down 4%, and the Russell's down about 4% too. And there's a Mag 7 basket that's out there. It's the 7 big stocks, and it's down about 4.8% year to date to start today's trading. And PCE came in this morning, kind of bore you with some details on the economy. It came in at 2.5. Core was 2.6% inflation, and that was actually down a tick. So some moderately good news on the inflation front, but 1 month doesn't make a trend. Bond yields are lower. I'm not sure if it's just pointing out toward a slowing economy, or what that may mean. But I think it's something that bears watching too. So thank you for listening. Have a good weekend. We'll be back on Monday. Thank you again. Goodbye.